Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good weekend, all. Ira Epstein of Linn Associates with the end of a trading week, October 5th, Friday, 2018. And as you look at the markets, you can see we had another down day today, at one point, a pretty severe one, where the markets got down another 180 points from here, almost 350 points in the Dow, 20 lower if you look at it in the S&P. The dollar index finished off today down 10. A mixed day in most, and the word is most of the currencies, but we are getting bids into the British pound, and one of the reasons seems to be that they're making some headway on the Brexit. Energy prices today fairly stable, nice rally in the grains. Have we seen season lows? We might have. And as you can imagine, over the weekend you're going to hear all the comments about how fast interest rates have been going up, so on and so forth. But what we do on this weekend edition is we start off with a monthly chart, then we move to weekly charts. Now, Monday through Thursday, as you know, we'll do the daily charts, but on the weekend we take a little longer view of the market. And when I come to the monthly chart, we're in a correction. The highest close we had was 29.19. We're at 28.94. Okay, we're backing off a little bit in the market. And as you can see from the 29.34 high close we had back here, we're now down about 40 points from that. That is not a problem either. If we look at the last time we had a low close, right on this week, that close was 28.74. So if you take a look, you're still not at that point. You can get there, but you're not there yet. Support's all the way back down at the 18-week moving average of closes, which if you take a look at it, you haven't hit since way back here, and I'm going back into May. So it's been a heck of a long time since the market's been there. In terms of the uptrend channel, as you can see, the market is still staying within it, has not broken out one way or the other. In terms of the swing lines, what you have is a market that still has a pattern of higher lows and higher highs. However, you have an outside week down, which means you made the highest high of the move. It's also called a key reversal. And it's called a key reversal, the key word being it's the highest high of this particular thrust in the market. And that now has come down. If that were taken out next week or the week after, I would call that a bear trap in the market and look for the market to then accelerate to the upside. Until that occurs, it says that the market's had a change of thinking, which I think you'd agree with. We saw that in the marketplace. Where's support? Back at the 18-week moving average at 28.37. Doesn't mean it has to go there, but often markets do if the markets get themselves into trouble. Now, if we look at this week's low, it was 28.73 1/4. The last break low on a week was 28.65. So that's going to be what traders, I think, concentrate on. Where did the market run into resistance? Again, I want you to look at these Bollinger Band tops. And remember, what these black lines are an algorithm developed by John Bollinger, by the way. And if you take a look at how they work, they're designed to keep the market trading within them 95% of the time. So what they offer is an area first that could be resistance. The next thing you look at if you're trending is the market hugging the band. That's a good sign. But often when you first hit those bands, what I teach in my charting course, and by the way, if you go on the internet to buy my charting course, the special ends later this weekend, SAVE, S-A-V-E 40. That's all you put in. The course is $129.95. It goes down to $89.95. And on Monday, the coupon no longer works, and I take the course up to $149.95 retail. As you can see how the market's working here, it's hitting that number and backing off. Okay, we see a resistance area, but momentum hasn't given in. The weekly momentum, it's fluctuating, but it hasn't closed back under 80. Now, if it does, that often leads to price and the momentum of the market carrying back to the 18-day average or some support zone. You're not there at this point in time. The market that is weaker, the momentum is also pointing down, is the NASDAQ. You can see how the market went up, challenged your upper Bollinger Band, ran into nothing but resistance, and you can see it right there, and all of a sudden the market's back down to the 18-day average of closes. If we take a look at last week's high, it was 76.86 and a quarter. This week's went up to 77.28, and from there you took out both last week's low and you fell down. First zone often is the 18-week average of support. If that gives ground and the market wanted to let go, then 70.73, the lower Bollinger Band, might be where the support comes in. You certainly stepped out of your uptrend on the NASDAQ at this point. Whether it's just a correction or an opportunity, it's not what I'm talking about. When we come to the Dow for the week, the market stayed up. So what we have here is a market that has an outside week up. The low of this week, if it's taken out, might portend that the market is going to go from there back to the 18-day average of closes. Momentum up, the trend up, higher lows, higher highs, still running against the upper Bollinger Band, hits it and backs away from it, which is what I teach. The weakest of the market shouldn't be a surprise to you. I've been saying in the daily charts the Russell's been the weakest, and you see it on the weekly. But now that you're down to the lower Bollinger Band, I say that with this move today, the shorts started covering their positions. I know you might think that's strange, but why is it any different than the first time you hit an upper Bollinger Band at the market? You start seeing the longs coming out. It's the same thing on the short side, and that's what I expect is going on right now. In the VIX, we went up to the upper Bollinger Band, both on the daily and the weekly chart. It is where I think the call writers have shown up, and they're looking to get back to the 18-week average of closes. You have not broken out of this narrowness. Now, the last time we had anything this narrow, if you go back, and I'll step this way so we can see it, you got really narrow back here, and then in February you exploded in the market and came right back down in a week's period. It was nothing that it stayed up. We'll see if that happens here. Obviously, higher interest rates are what's on everybody's mind, and when I mention that, it's because you're trying to break out to the downside out of this long sideways action that we had. We actually began that breakout starting September 21st. That was the first time you were under the Bollinger Band. Last week, the market finished out at 118 and a quarter, 2 weeks in a row under the lower band. This is the third week. Even on weekly charts in Bollinger Bands, I applied the theory that 95% of the time the market will stay within the bands, and when it's out of the bands on a consecutive basis, I take each one of those weeks in this case and subtract it from that 5%. So at some point here, I'm expecting the market to try to get back within the band. A trend change doesn't have to be. First of all, you're not trending. You got a higher high, lower low, whereas the market just fell apart all of a sudden. Went from way up here, 120.24, down 3 full points, and you are still have downside momentum. But the fact that you're under that band is worrisome. When you come to TLT, it's a different story. First of all, it's similar in the sense that you're under the band, but lower highs, lower lows. A much more bearish chart. You'd have to get back over 117.91 to negate this. Both markets have tried to break out to the downside, and it's going to put the onus on those that think that this market doesn't belong down here to prove different. I think the sellers will be waiting in the wings. In the dollar index, you got up this week over 95.68. So that pattern that we had of lower highs, lower lows that went down to the lower Bollinger Band, found support, has now come back into the resistance area of the combination of the 18-day average and the 100. You voided the downtrend, but you have not begun an uptrend. You're really caught in the bigger story in sideways action right now. And it's the flip-flop, but not quite as bearish on the Eurocurrency as the dollar, because you still have a pattern, what? If we look at it, higher high, this week's low was 115.26, and I realize it doesn't look like that, but you took out that 115.30 and a half. So now you have a higher high, lower low pattern, momentum pointing flat. How's that for the good word? You are under the 18-week average, but you found support at the 100, and you've got this sideways action in the market. In the British pound, we have had a pattern in place of higher lows, higher highs. Now the market was able to climb up over the 100-week and the 18-week average of closes. Until you get back under both, the trend is now up, the bias is up. So if the market wants to advance, is the 134 level on the weekly chart going to be the area you go to? If you knew nothing else, the way that we talk about Bollinger Bands, the market had come down last week, tried to rally back up, went up this week on the good news that we did a trade deal, and then fell right back, and for the week you're down 12 points. This could have been the old buy the rumor, sell the fact, but more likely the market's still fighting within the Bollinger Bands in a position where momentum is up, bias is up, trend is up, but you hit that resistance, so support likely at 77.22, the 100-week average. In the Japanese yen, you still have momentum down. You're still riding the lower Bollinger Band. It's the first week under that number. In fact, you basically, you closed under it. The 88.43 is there. Lower highs, lower lows. So far, this is a breakout to the downside as the market is riding that pattern down. In Bitcoin, very neutral here on the longer chart against the 18-week average of closes. Momentum is flattened out, and price volatility is flattening. You're pulling within here. The question is this market going to see more buying? Yale, the big university, part of what I understand their annuity fund, I guess their investment fund's the right word, they invested in some crypto funds. Interesting. So you're starting to get big names looking at these markets. I can understand the sideways action. It hasn't broken out in a trend yet. Brent versus WTI crude, still an upthrust in the market. You haven't gotten back to the old 1098 level. We know that the market has been going up basis the fact that you're losing the oil from Iran. At the same time, the Saudis today said they've made that difference up. I don't know. The market's not believing them. You do have a pattern of a lower low, higher high, but you had a breakout. And this is sideways action. Last week up, and you're continuing. So until it pulls back within it, you have a breakout to the upside. How high it'll go, I can't tell, but nothing is showing on this chart that it's ready to pull back other than, let me come back to it. You only stay 5% of the time over an upper Bollinger Band. You were over that number last week and this week. So you got a 3% chance, as I use my rule of thumb, and that's all it is a rule of thumb, that you'll stay over that number by the end of the week. In the WTI crude, you went up challenged for the first time since way back here in June, the upper Bollinger Band, and as I'd expect, the pros stepped in, took some money off the table. That resistance is still in place. Yes, the trend is up, and until you get under 67.33 on this pattern, it stays up. Rebob gasoline still has a pattern of lower highs and lower lows. It does have the market over the 18-week average, so when that happens, even though the trend is down with the lower high, lower low, the bias is up. The two neutralize each other. Momentum still pointing to the upside. We'll see if that slips away. And in the nat gas, this is a market that actually broke out, and it's over the upper Bollinger Band. I'm laughing because normally at this time of the year it's not what it does. A lot of traders are going to say this market at the 270 level has made a bottom that could be very important. On pullbacks, I wouldn't be surprised to see the 100-day average act as support. The trend is up, the bias is up, and momentum is up in the market. We were swamped today, and in Chicago we had a huge trial that they were so fearful that we'd have riots in the city if a certain verdict didn't come out, that they sent home staff from the Merck and everything over the weekend. I could not finish my silver report. There was no chance that it could be done. I'll get it done for you this week. So if you haven't gotten on my mailing list, it's a good time to do it because I've got a report coming out on silver. You can call my staff. You can go to our website. You can also click up here if you're watching me on YouTube. When you get to our website, click any of our free offers. In one of them, in all of them, you're going to see silver report. Be sure you sign up if you want to get it. I'm Ira Epstein. You have a great weekend. I'll see everybody come Monday.